What's going on YouTube world? Austin Zaback here with another YouTube video. It has been a while since I've made a YouTube video, and in today's video we're going to be talking about how you as a beginner can start investing in the stock market in 2020. I'm sure many of you have seen movies like Money Monster, The Big Short, or The Wolf of Wall Street, and you've probably wondered at one point or another how they got started into investing in the stock market. So we're gonna go ahead and break that down for you. Make sure you stay to the end of the video, and if you haven't already, I would really appreciate if you just smash that like button. Understanding the fundamental keys to investing in the stock market are extremely important. Whether you're a brand new investor, you're maybe an investor that has already traded some stocks, maybe you're day trading, maybe you're swing trading, or maybe you're looking to just invest in the stock market long term and you're not really sure where to start. Maybe you're not sure, what brokerage account to pick. You're just not sure in general. So we're gonna go ahead and just break all of that down right here. Obviously, the first thing to take into account is what in the world is a stock, okay? Hopefully, if you're watching the video, you already know what a stock is. You can fast forward really quick, but I'm just gonna go ahead and break down what an actual stock even is. You've probably even heard the term at one point or another of a company going public, or maybe even doing an IPO, which stands for an initial public offering. Basically, when a private company wants to go ahead and raise money, they can do so by borrowing money through a bond, right? Through bonds, okay? Or another way that they can do it is they can go ahead and they can actually sell shares of a stock, essentially, to go ahead and raise money, which automatically makes them publicly traded. Say a company's valued at $1 billion, they can go ahead and take 100 million shares, for example, and they can sell those 100 million shares of the company. So about 10% of the overall company, valuing each individual stock at about $10, or 100 millionth of the actual company, okay? So pretty dang cool if you ask me. So if you go out there and you buy 100 shares of that stock for $1,000, you actually end up owning about 0.0006% of the company. Now for most of us, that obviously is not that much, okay? And at the end of the day, we own a little bit of the company, but we don't actually have enough shares, we don't own enough of the company to have voting rights, right? To be able to actually make decisions on behalf of the company. So once a company issues shares of a stock, then what you can do is you can go purchase those shares of the actual stock. And now in a nutshell, you can buy those through most actual brokerage accounts, right? You can look on the New York Stock Exchange and typically you can buy an actual share of that stock right then and there. Once a company ends up going public, they offer their shares of their stock for sale on the open, like let's call it the New York Stock Exchange. Then people can go and they can buy, they can sell that particular stock, okay? Again, you have to have a brokerage account and the stock needs to be publicly traded, okay? The company needs to be publicly traded in order to make that happen, okay? But that is why it is really important to pay attention every single day to what the stock market is doing and what the different companies are doing that you're buying shares of. For example, you look at Tesla. Tesla's like on fire right now, okay? Everybody and their mom wants to buy Tesla. I had an opportunity to buy it for like $700. I didn't end up buying it. And now at the time of making today's video, I think Tesla is literally worth like $2,200. And investors can literally exchange their stocks every single day. They can buy them, they can sell them, they can short them, they can do all of these different things. And in a nutshell, there's literally hundreds of millions of shares of any given stock sold every single day. So the next real big thing that you want to take into account is where do you actually buy stocks, okay? I know I talked a little bit about having a brokerage account, but I want to dive into that really quick. Maybe you're young, you're watching the video, you want to get into the stock market, you've seen a bunch of big people on YouTube talking about the stock market. So where in the world do you actually go to buy stocks, and what is the best brokerage account in order to do so? And there's all kinds of big brokerage accounts, okay? TD Ameritrade, Thinkorswim, you have Robinhood, you have webull, you have all of these different things that you can choose from. So which one is actually the best? It's obviously really important to pick a good brokerage account because you want to find a brokerage account that'll really fit your investing needs, okay? At the end of the day, you don't want to pick the wrong brokerage account and maybe you want to day trade, maybe you want to do different things like that, and you pick a brokerage account that won't allow you to do that, okay? So it is very important that you do pick the right brokerage account for you particularly, right? To do what it is that you want to do to fit your investment criteria, your investment needs, and ultimately so you can make some money in the stock market. And the reality of it is there's different brokerage accounts that definitely tailor to different types of investors. For example, M1 Finance is a really good brokerage account, typically from my perspective, for more of the long-term hold kind of guys, okay? So if you want to buy a stock, you want to hold on to it for the long haul, you want to ride the wave, you know that, over the long haul, historically, the stock market will always go up in value. over time, okay, no matter what, then M1 Finance might be a great option for you. M1 Finance also has a way where you can automate your investing, which is very, very cool. It makes investing very, very simple, okay? And basically, it makes it easy to manage. Then there's different ones like webull, right? And webull actually favors, in my opinion, a lot more for people that are looking to day trade. Here, you're gonna get a bunch of different features like a stock stimulator to test different strategies, to do different things, basically before you invest. You also get to do stock research, so you get to see different stocks that are gonna be issuing shares in the near future. Webull, in my opinion, is much more suited for investors that really want that control. They really wanna monitor what is going on. They want control of what it is that they're doing. They wanna go in there and they really wanna look at things every single day or maybe every single week. And even though there's different platforms, there's all different types of investments and all sorts of different things as it pertains to the stock market, it doesn't mean that you can't have multiple different investments on multiple different websites. And as a matter of fact, I would actually recommend it. I would recommend that you diversify and you try Webull and you try Robinhood and you try TD Ameritrade and you try the different ones to see really ultimately what one fits your investment needs the best. If you do all of your investing on one particular platform with one particular brokerage on one particular website, in my opinion, you really limit yourself to all of the different freebies that you can get, all of the different promotional things that you can get by really diversifying and testing out the different features of the different platforms. So now that we've really talked about what stocks are and we've really talked about the different platforms and the different ways that you can actually buy a stock, let's go ahead and talk about how do you actually pick a stock. And of course, there's literally millions and millions of stocks that you can pick from, but buying the right stock is very, very, very important. This is ultimately how you're gonna build your investment portfolio over time, and you're gonna grow your wealth and actually be able to leverage what they call compound interest, right? And ultimately, in my opinion, and I've said it before, compound interest is truly the eighth wonder of the world. Think of your stock investing strategy as the what of investing, okay? The ultimate what stocks are you gonna put in your portfolio? And think of the portfolio strategy as more of the how of investing, right? How you put together your portfolio is definitely gonna be crucial. You know, what different types of stocks are you gonna add to your portfolio so that you can achieve financial freedom over a long period of time? I wanna talk to you a minute about value investing and what exactly value investing really entails. Finding value stocks in a nutshell is just looking for stocks with a low price to sales or a low price to earnings ratio, which you can pretty much use any stock screener to be able to do this, okay? So definitely do a little bit of research on that as you go to pick your stocks. Now, of course, you don't wanna just invest in any cheap stock, obviously. At the end of the day, there's a lot more research that needs to take place in order for you to really feel good at night when you go to bed about the stocks that you choose to invest in. You wanna look for stocks that are not only cheap, but at the same time have good sales growth. You really wanna look for an operating margin that is higher than competitors and not too much debt in the actual company, okay? So again, you can really dive into this and you can really learn a whole lot as it pertains to investing in a particular stock. And growth investing is very similar to value investing, except what you're looking for with growth investing are stocks basically that are fast growing companies, right? Regardless of price, you're looking for companies that are growing at a very, very rapid pace. When I'm looking for growth stocks, what I'm really looking for are stocks that have earnings and sales growth, okay, that are at the top of that particular industry, that are outdoing their competition. They're looking to scale the actual company. They're really looking to grow in the future. So really, those are my favorite ways to really look at the stock market and understand, okay, what stocks do I actually want to buy? Do I want to buy value stocks or do I want to buy growth stocks? Okay, what do I really want to do? Do I want to buy and hold? Do I want to day trade? Do I want to swing trade? And ultimately, what is going to be my actual investment strategy? Which kind of leads me to my next point of how much money should you actually invest if you're looking to invest into the stock market? Probably the most frequent question that I get asked is, Austin, how much money should I invest, right? Should I invest $500 a month, $1,000 a month, $1,500 a month? Really, what should be the frequency of the amount of money that I invest? Should I invest, daily, monthly, weekly, yearly, and overall, what should that look and feel like? And really the answer you're probably not gonna like, but at the end of the day, you can't expect to make a ton of money overnight, right? Nothing in this world worth having happens overnight. So you're not going to invest a bunch of money and become wealthy tomorrow. I'm sure there are anomalies to that exact scenario, but at the end of the day, you have to understand that with investing in anything, right, it will take time. And at the end of the day, the things that happen overnight, the things where you get rich overnight, are the things that typically are a lot more risky. And remember, at the end of the day, there's a lot of different ways that you can make money in the stock market. You can short a stock, you can sell a stock to make money, you can get paid out via dividends, okay? And there's so many other ways that you can ultimately make money in the stock market. There's a lot of people nowadays that are buying option contracts as well, and that will probably save to another video. So if you haven't already, I would really appreciate if you would smash the like button, drop in the comment section below, letting me know if you want me to make videos on buying option contracts, if you want me to make videos on shorting stocks. But at the end of the day, I would say the top 2 ways that you're going to make money in the stock market are through dividend stocks and just selling a stock in general. So buying low and selling high. Really, at the end of the day, you have to ask yourself, what amount of money are you comfortable with investing where you're not going to actually touch the principal? At the end of the day, you don't want your actual amount, right, your total amount to be going down. You want it to be going up. So you want to invest an amount of money that you can just let sit there, right? You can let that compound interest work its magic, let the exponential growth happen over time. And that, in my opinion, is probably the best way to invest in the stock market. A good rule of thumb is that you never want to take out more than like 4 or 5%. And at the end of the day, 4 or 5%, if you take that out of your actual portfolio in terms of your total overall portfolio value, you shouldn't actually see a decrease. It should continue to compound at a higher interest rate than 4 or 5%. Again, historically, when you look at the stock market over the last 50 or 100 years. The main thing you never want to do is you never want to touch the actual principal. So I know I answered a lot of your questions at the end of the day, and I'm happy to answer a lot more of your questions. Again, just let me know in the comment section below what other questions you would like to have answered. But what I would really do is I would figure out a monthly investment strategy for yourself. What amount of money are you comfortable with taking from your earned income, right? The money that you make at your job, the money you make, working your business, whatever that is, what amount of money are you comfortable with taking every single month from your earned income and investing it into the stock market? I see a lot of new investors that take way too much money, right? They take way too much money of their earned income and invest it. And the problem with that is you never have an emergency fund. If things were to go south, you ultimately now have to take your money back out. You have to sell shares of the actual stock in order to actually pay your bills, in order to, fix your car, in order to repair, your house, whatever it is. So ultimately, at the end of the day, like Dave Ramsey would probably say, is make sure you have an emergency fund. Make sure that you have, 3 to 6 months worth of emergency money sitting on the sideline before you actually take any money and throw it into any investment at all. Obviously the stock market being included in that. So that really is kind of an intro to investing into the stock market. I know it wasn't too crazy of a video. I wanted to keep it really, really simple at the end of the day. Let me know if you have any questions. I'd be happy to make a lot more videos. I hope you like my new set. Okay, I just kind of redid my new YouTube set. Okay, so I'm going to be making a lot more videos, a lot of real estate videos, a lot of stock market videos, a lot of just overall videos in general. So again, if you haven't already, I would really appreciate it if you just go ahead and just smash that like button, as it really does help me out with the YouTube algorithm. Again, I would really, really, really appreciate that. There's a bunch of links in the description down below. Definitely check out Webull. I have a link down there that'll allow you to sign up. If you invest $100, they'll give you 2 free stocks valued potentially up to $1,400. So definitely go check that out. I would really appreciate it. And if you haven't already, again, subscribe to my YouTube channel. I would love to make a lot more videos just like this one. And I look forward to seeing you in the next video.